Okay, question 2.4 is building upon question 2.3, where we move from net income up to EBIT. In this question, we're given an amount called EBITDA, or EBITDA, where the DA stands for depreciation and amortization. Some of you may remember amortization as amortizing a loan. This is a little bit different, where this is a non-cash item like depreciation. And so what we're trying to figure out here is how much went towards depreciation and amortization. Don't confuse it with the amortization alone. Really builds on the last question. Again, we know that EBIT less taxes equal net income. If we treat EBT as a whole unit of 1, since the tax rate is 0.4, what's left over is 0.6. So we can apply that same backstepping approach. Again, EBITDA is 8 million, net income 2.4 million, and interest expense of 2 million. So how can we work in reverse here? So our 2.4 divided by 0.6. We know that EBT must have been 4 million. Which then the difference between 4 million and 2.4 million is obviously 1.6 million. So 1.6 million went to tax, and we had 2.4 million left over. So then we're looking at what is our EBIT. Well, it's our EBT plus interest expense, so 6 million. And again, we found that number just by adding the I in the EBT to get EBIT. So then how much went towards depreciation and amortization? Well, again, it's the difference between these two, which is 2 million. So I hope that you find this question isn't actually all that difficult. It's just understanding this relationship right here and then working in reverse to find out how much was taken off of the income statement for depreciation and amortization. All right. Hopefully that clarified any questions, and move on to the next one.